Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a company valuation expert in St. Louis, Missouri. I have the privilege of discussing venture capital and startup company valuations today with Lorenzo Carver, a valuation expert in Boulder, Colorado. A lot of times people are trying to understand. So I have a good concept. Maybe I have some investors, or maybe I just have smart people that have come together. And then I got to go to the venture, like that's what we always go to just in our minds.
Mhm.
You know, we know angel investors, or we know, smaller investors, family and friends and things like
Mhm.
that. But what
Right.
are some of the different stages of venture capital funding from a startup company perspective?
Yeah, if we're talking about like the real growth companies, that over the last 20 years has almost again become like codified where, it wasn't that way 30 years ago. It just
Mm-hmm.
wasn't. So, all the people, startups, even the VCs, they were investing in things that weren't necessarily like technology. I mean, because I can remember some VC firms that like, oh, somebody has a new toothbrush. Yes, that's technology. Yes, you have a patent on it. But by today's standards, it's like that person would be going to an angel investor or
Mm-hmm.
something, right? Or some family office or something, someone other than like a kind of VC today. But today, the you could say that the stages are pre-seed, which is like, oh, I have an idea of something I might do, and believe it or not, there's whole systems out there to support those people now.
Mm-hmm.
And most of these accelerators, they love people at that stage. And that kind of speaks to another aspect of startup companies and kind of like who can actually get funding. Because a lot of times people that are at that pre-seed stage, they're young people who haven't really maybe done anything else, from a business perspective, but they have some other attributes that make them, kind of suitable to kind of that collection of people. Either
Mm-hmm.
they worked at a successful startup company, they went to a very prestigious school, they have some other like academic or scientific achievement, they crack some code somewhere. You don't
Right.
know, or they just seem like, they're really bright and really ambitious. So you just don't know. But I'm just saying that at the pre-seed stage, there's actually resources for those people today. There wasn't. I mean, there really wasn't 10 years ago, or more
Well,
like 15 years ago.
and these are the
So,
incubators,
right.
right?
Mhm.
That
Yeah.
really try, and a lot of times you actually have to apply to be a part of them. Like
Oh,
you
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 definitely
go
do.
through a
Mhm.
process. Like you don't just say, "Hey, I have an idea. Give me
That's
some
right.
seed
Uh-huh.
funding." It's like you kind of go through an application process depending
Mhm.
upon the incubator to hone your skills,
Right.
hone the concept,
Mhm.
and then kind of where do they go from there?
Yeah, so I mean the incubators, so it's kind of funny. Before I met like NACVA or
Hmm.
NACVA, I actually met them through an incubator indirectly, believe it or not.
Okay.
So when I started Liquid Scenarios, which was to value, venture funded companies, high growth companies, and it would basically suck in like a spreadsheet that just had like their cap table, and then it generate all these models for them and say, okay, this is the value of this company for financial reporting or for tax purposes. And so the a couple of the people on my team were in St. Petersburg, which is like a lot of bright people there. So and they saw that there was a meeting below my office that this VC was having. They're like, hey, you should go to this meeting. And so I went there. I met a really cool guy that was a VC. His partner founded a company called Techstars. So, which is probably like the number two, well, number one or number two in terms of total number of companies that they've funded.
Wow.
And then the other person who founded Techstars is now the governor of Colorado. So, and he actually in his dorm room started like several, like multiple, what became like billion-dollar companies. So, yeah, so basically, one of the groups from their first cohort or the first people that went through there, one of the advisors said, "Hey, you should talk to these guys that are doing this triple bottom line tool." And so they visited me. I gave them like, we exchanged some information. They're like, hey, you should check out these exit planning people. And so I went to their event for the exit planning and I met Brian Jones there. So
There you
that's,
go. Okay.
so anyway, but yeah, so the seed stage places today, they were writing checks at like 100,000. I mean, back in the day, I think they were given like 10,000 or something,
10,
or nothing,
25,
like,
50. Yeah.
but they would have these events where all the people in the audience had the inclination and the capacity to write a check, which meant that a seed round, right? So they're pre-seed before they go there, but they're seed once they're done.
Gotcha.
So at the seed stage, you're talking like $500,000 to $1 million today. Back then, you were talking like 100 grand, and maybe a bigger seed would be like 500,000. So, but today, pretty much, if you go through one of those, you're guaranteed because people know that like they've de-risked this thing. They've honed the message in terms of like, what is the startup doing? Which that may sound like an insignificant thing, but I can assure you, in a lot of cases, it's more important than what they're actually building.